Speaking of extra cash, in today's Money Watch, we are answering your money questions. Well, maybe not we, more like CBS News business analyst Jill Schlesinger, who is a certified financial planner and regularly gives advice on her amazing podcast, Jill on Money, and her radio show. Jill, welcome.
Hello.
Okay, long list. Let's get to it.
Let's do it.
So the first question comes from actually one of our staff members who we promised to keep anonymous, and we will. I actually have no idea who it is. The question is it okay to cancel credit cards, or should it be avoided at all costs?
Okay, here's the thing with credit. It is a weird compilation of information. So here is how a FICO credit score is actually calculated. There's a part of it that's just your payment history. It's the amount of credit that's available. It's how long you've had it open. And what's interesting is when you cancel a credit card, it's actually a negative impact on your score. So let's say you're done, you've paid off this credit card, you're not going to use it anymore. As long as there's no fee attached to that card, stick it into the back of the drawer, stop using it. Don't cancel it because it negatively impacts your credit score.
Follow up to that, when you get married, does your partner's credit score affect yours?
Well, each of us has our own credit score. The only way that your partner or your spouse's credit is impacted by yours is if you're applying for credit together. The most common pathway is we apply for a mortgage together. Now, let's say your partner is a bust out, terrible credit, you're fabulous, Tony. And if that's the case, when you apply together, the good person's score can help boost the person who has a lower score. But I really want to tell everybody, and I'm going to be very clear about this, please avoid applying for credit cards together because you don't need to do that. You can have another sign, you can have approval for someone to do it, but someone's bad credit score can drag your good credit score down, and then when you need it, it's bad for both of you.
Oh, good advice. All right, so Ken from Pennsylvania wants to know, what are the advantages or the disadvantages to keeping income and expenses separate in a marriage? Seems like a lot of meaningless paperwork.
Yeah, I mean, this is really up to you. It is very clear to me that there are some couples where pushing it all together, having one person manage the bill paying and managing the process really does make sense. But if you're going to do that, please communicate your system to the non-involved spouse. Now, if you want to keep things separate, that's okay too. People get married later, you've got your own lives, but you want to have probably one account where there is a repository for your joint bills. But you want to keep it separate? Fine, no big deal. Keep good records, keep the communication lines open.
I want to talk about Veronica from California. She's 40, has a new job, and she has a 401k question. Pre-tax option and Roth option. What's the difference? What do you recommend?
Okay, so when you have a 401k, a 403b, any job-related retirement plan, there are two options that are available usually. One is a traditional 401k, 403b. That's pre-tax. What happens with that is money comes into your account, and it's basically not taxed yet. So if I say I'm putting $10 into this 401k, that $10 goes in, no tax that's due. When I take the money out later in life, after 59 and a half, whatever tax bracket I'm in at that time, that's when the tax is due. With a Roth, you pay the tax on that $10 today. The money goes into the account. It grows, it grows, it grows. You take the money out later, no tax due. For younger people especially, I love the Roth. Roth retirement plans actually help you really understand what your future tax liability is. So all Roth all the time, especially if you're under 40.
Hey, if you could do it quickly, I'm really interested in Shannon from New York asking, how much money should someone have in savings when thinking about having a child?
An unlimited amount, obviously. You guys would know that. We generally say you should try to have 6 months of an emergency reserve. If you're going to have a kid, let's try to get that to 9 months. But look at these expenses. Gang, something around $12,000 to $15,000 in the first year on things for like diapers and car seats. So I hate baby showers. I am allergic to them, but I think you should have a baby shower and get all of your friends and family to pay for as much of this stuff in advance. And if you invite me, I will send you a check and not arrive. So that's how I roll.
I was just going to say, if I have another one, you're coming.
Yeah, you betcha. I'm not coming, but I'll definitely send you the money.
Or you'll host it in your beautiful house.
Oh, gosh.
You love kids.
I do love kids, but I really love the four-legged ones, which they don't need diapers.
I'll bring a diaper cake. Jill Schlesinger, thank you so much. If you have a question for Jill, send an email to askjill@cbs.com. She could answer it in an upcoming segment.